All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon for the best macro, metals, mining, commodities, research, and stock picks. And come find me on carnivoretrades.com for swing trading, alerts, and analysis. Anyways, let's get into it here. So S&P 500, another rally, continued rally. So we had the nice little surge here starting on the 14th of July. And then last week when we did the video, we kind of stalled out a little bit. And then we pulled back early in the week and just continued to push higher into the close Friday. Shorts were decimated. And it was really a nice little short squeeze. And like we've been saying on here for a while, there's, the likelihood for a good summer rally. And that has continued to follow through to the upside here. Now, we are still into a little bit of resistance here. So you see that 100 MA, we're kind of stretched short term. If you look in the last 2 weeks, we've had basically a 50-point move on the SPY in just a 2-week period here. And you're going into this area where you had a bullish kind of consolidation, and then that failed. So there's a lot of longs trapped in there, and that will be resistance. You're short term stretched going into that. So probably, due for some consolidation, due for a pullback, something of that nature here. But ultimately, I still believe there's a little bit of time on the clock for this rally here. So, we got to kind of give the market the upside bias until that, that time comes. But for right now, market is holding up okay. Reason for the rally, the Fed basically, in so many words, they basically pivoted. Now it's a little technical, when I say pivot, they didn't say like, oh, hey, we're going to start buying bonds, but they said basically the magic words. Powell said, our policy decision in September, which remember is 2 months away, the 75 basis point this past week was priced in. The market knew that was coming. All the market wanted to hear was the September meeting will be data dependent. And that's exactly what Powell said. And the market loved that, because basically what that means is if the economy slows down, that guarantees that the Fed is probably going to stop doing QT. And sure enough, the very next day, this was Thursday, we got GDP numbers. They were bad, and the market loved it. So market rallying, and it's kind of pricing in a more dovish Fed in September. I personally think that they'll probably do maybe a small hike in September, kind of to save face, and kind of to not really totally pivot, because they don't want to pivot all at once and look stupid. But I think they'll probably do maybe 25 basis points. This is just me personally. And then that's it. They're probably done. So the market liking that right now, and with the light volume, with not a lot of traders, a lot of traders taking off, summer doldrums, the market just loves it. So market is doing well right now, and you have to respect that. Now, we'll talk a little bit more on this later in the video, so definitely watch to the end, because there's a lot to unpack there, but we'll get into it a little bit later. We did have earnings season though this week, and again, market in kind of melt up mode and dovish mode, and you see Apple there, big gap up, got back above this trend line and the 200 moving average, so that is acting well right now. Amazon also with a huge gap, up over 10% for $1 trillion stock. That is a huge move. You do have some levels up here there. Tesla obviously reported last week, but after the pullback into Thursday, Friday last week, and then Monday, or excuse me, I should say Friday, and then Monday, Tuesday earlier this week, we had a huge surge into Friday. Microsoft had basically a fake breakdown here, or attempted breakdown right before earnings. That surged 3 days in a row. Same thing on Google, got below this trend line, faked out the bears. So again, earnings season is mostly over with now. Meta did kind of drop the ball a little bit. That was one of the losers as far as big tech, but earnings season's out of the way. The market got out of it unscathed, and it looks to be holding up for now. All things considered, we can take a look at the semis here as we usually do. That got back above the 100 moving average. You filled this gap and got a nice little surge. This has upside to about 245. IGV Cloud Software, a little bit on the softer side, still below this pivot here, so hasn't made a higher high yet. I'd give that the upside to about 300 to 303 there. And then the transport's the big winner here. You guys remember this when I did the video 2 weeks ago. I said, the upside here for the transports is that they're already at 52-week lows going into earnings season. So your potential upside, or the reason for a rally, could be that, that's just priced in. So, and that really was the low right there. So we've got above that trend line, put in a little bull flag, and then a nice 1, 2, 3 up. I would give that kind of a max move around 15,000, maybe 15,100 here, but transport's acting well also. As far as interest rates, we got to talk about this. So TNX here, the 10-year Treasury yield, we triggered a head and shoulder pattern here this past week. We talked about it last week. It didn't quite trigger because we got below that trend line and then we closed above it, but that triggered this week and we are headed down. So if this does play out to target, this should get down to close to 2%, and there's a gap right there as well on the chart, so maybe that can fill, but that is the target there on the TNX on the 30-year here. That also triggered this week, so I've got about 2.4, 2.5 as a target there on the 30-year. So bonds are liking this move as well. And, you know, obviously they're liking kind of the, you know, they're pricing in the Fed slowing down the QT. And that's essentially what is happening right now. Here you see HYG here, high yield debt, that also coming strongly off the low. So that is also, you know, obviously liking the Fed's comments. And then if we take a look at XHB, home builders, ITB, and VNQ, real estate ETF here, they're also rallying off the low. So that goes hand in hand with the lower yield. So that is liking the bond rally financials as well. XLF and XBD also popping here. And again, the 10 and 30-year yields, if we take a look at that, I can flip over here. You see there's the 10 and 30-year. So that is starting to drop now, and that is actually not inverted anymore. Now the 2 and 10 is still holding up, but the 10 and 30 coming down, that is a good sign for financials. The market likes that right now, and that is definitely helping out broker dealers, which really likes those junk bonds. You know, those are the you know, the Goldmans, the kind of investment banks, not so much the money center banks, but they're really liking that high yield debt getting a bid here. Now again, we'll talk about this further in a minute as far as how it relates to precious metals. But first, let's go into energy here, as we usually get to energy after the fins. But let's take a look at crude. So crude's still hovering above this 200 moving average here, just kind of chopping sideways. Also coincides with that 50-week moving average and kind of these pivots down here. Again, it's kind of just stuck in this trading range right now, has been for the last 2 weeks or so. And on the daily, you're still inside of this big red bar here. So again, you guys know my kind of thesis here. I still think we have one more drop in spot crude, and then it'll be time to get in. We'll have a really good buying opportunity here. And the same thing goes for XLE, you know, all these nice little pop on XLE this week. Again, you know, squeezing with the rest of the market. Same thing with XOP, OIH, oil services, all getting a nice bid here. I still think they've got one more leg lower, and then we'll have a really good buying opportunity. And, you know, I told you guys not to chase these things on the way up. You know, take a look at, you know, I was getting messages all the time about, can we buy XOP? Can we buy Exxon? Can we buy Chevron? All this way up. And I said, guys, don't chase it up here. They're overbought. They're extended. Wait for the correction. So we've gotten a nice correction. I still think we have one more leg down. So I'm just asking everybody to be patient here. We'll get a chance to get in. But, you know, half of trading and investing is, you know, just having patience and waiting here. So again, just be patient one more time, and I think we'll get a really good setup here. But nice little pop here short term for a sector that was, you know, quite frankly, pretty oversold short term. Let's take a look at nat gas. So this one's the outlier as far as energy is concerned. Nat gas making new 52-week highs. You know, we dollar cost averaged on the long side here into BOIL, which is 2 times long nat gas on a swing trade, and we dollar cost average is right down at 550. That was our last ad. You know, I didn't think it was going to go this high this quickly, but you know, it just did. You know, I sold for a decent gain right in this area here, but you know, what can you say? Nat gas has been an absolute powerhouse here, just a tank. And short term, though, we did put in a pretty nasty topping tail after making a 52-week high. It just got way too overbought here and blew through all these resistance levels, got right through the 50 moving average. You only pulled back for 1 day. You know, you blew through this trend line, blew through this red bar high, you know, blew through all these pivots. So, you know, it got really overextended and overbought. May have a little bit more downside here in the near term, but, you know, what can you say? It's been holding up so well. I will say it has probably topped out a little bit short term. That is a pretty nasty reversal bar right there. So it may want to pull back into this trend line, which kind of coincides with that 20 moving average as well as that 50 moving average. They're starting to kind of curl up and kind of converge in the same area. So we'll see what we get there. But just an amazing amounts of volatility in nat gas this year, and obviously has a strong fundamental reason for it, especially given the situation in Europe. Anyways, dollar index here continue to pull back. So last week I said it's probably it got close to my resistance level. I said 110 would probably do it. I wouldn't rule out a move, and I still wouldn't rule out a move up there, but we came down here, we consolidated sideways, put in a little bit of a bear pattern. I think it probably wants to go test that 50 MA here in the short term. But, the dollar is parabolic, on the weekly. It's parabolic on the monthly. Even with the pullback here, it's still parabolic. It's a pretty good monthly reversal, though. All things considered, I wouldn't rule out another leg up here. Still never got a sell signal, but dollar did get through that 20 moving average, so a little bit of short-term technical damage. We'll have to see a little bit more here with the market, but again, the dollar did drift a little bit lower this week. All right, so let's flip over to some other energy plays here. So CCJ, let's talk about uranium. So I've been telling you guys for the last couple of weeks, we got to get above this weekly bar here. We did that, passed it with flying colors. That was critical. We really needed to do that, and I wasn't convinced it was going to happen, but CCJ showing some good relative strength, closing back above all four major moving averages here on the weekly time frame. So that's not insignificant. Nice move there, and it this trend line got defended, so that needed to happen. You see the same thing on the URNM, so that got above that weekly red bar as well. It did stall out right here at that 20 moving average. Near term, I'd give it the upside to maybe 71, so you got this red bar here and that 100 MA. If you can get through that, maybe you can get up to the 200 around 75. And then CCJ, there's a gap at 26.15, so that'll be near-term resistance. Again, it's a little stretched short-term. And then if you get through that, I got about 27.45, 27.50 there for your next resistance level. But a nice little showing there for uranium this week. Let's take a look here at potash. So let's take a look at MOS, Mosaic. Nice move. I didn't think it was going to continue off the lows there, but it closed above. If we take a look on the weekly again, got above that red bar high on the weekly. So a nice move for Mosaic. Near term, you can get up to 35 or so. You're going to come into some resistance around these pivots there, pivot low and that red bar, around, or excuse me, not 35, 55, sorry, 55 there on MOS. But a nice little reversal candle getting above that weekly bar high. And then Intrepid, I'd give that the upside to about 48 or 49 there in the near term. Obviously, this one's a little bit weaker. And we also have NTR as well. That got up into that 50 moving average. That could get up to about 89 or 90 here in the near term. But again, it's a little, just a little overbought here short term. Then for those of you who follow ag stocks, DBC here, again, a nice rally. You closed above, you got above this daily red bar candle here, but on the weekly, didn't quite get above this one, so a little bit of a mixed bag there. Still a nice little reversal bar on the weekly though, and I would give that the upside bias, to this kind of necktie here of the 50 and 100 moving average. The positive is you're still in a really strong weekly uptrend, and again, you just got really overbought like a lot of these ag things did, and when you get overbought, you got to come back in, and that's just really the nature of it and the nature of stocks. Anyways, so let's get into the metals here. So I was talking about the yield curve with rates here, and this is important because it relates back to gold. So we got into that 1680 area. So again, this was support a couple of times over the last year, and we tagged that. So it also kind of basically kissed that 200-week moving average as well. So we got there, and then this monthly trend line I've been showing you guys for the last couple of weeks. What did I say could happen? I said, hey, we broke through it, but we still could close above it on the monthly, and we did do that. So they saved that trend line there. And, a lot of what this comes down to is, so if the Fed stops doing QE or QT, that's going to be bullish metals. It's going to be bullish gold versus yields. And you're seeing the market kind of realize that there. We had the COT reports coming out recently. It was very, very, very bearish, pretty much anything metals. And the trade just got really one-sided, especially for miners. I remember, so I got into GDX sub 25 last week. We had one more dip on Monday, and I told my members, I wouldn't be surprised if we had an engulfing reversal this week. Well, if you take a look at the weekly, we basically had an engulfing reversal on the weekly time frame. I told you guys I like this level very much, and we had a nice reversal there. I was actually talking with Jason about this on Monday after Newmont reported earnings. And you know, they totally crapped the bed here. The market just hated it, and there's been some forced margin selling going on. That's why it hasn't participated in the recent rally here. Agnico did report Thursday, and I believe it was Wednesday afternoon, but the market gapped it up on Thursday, and it held the gains Friday. So Agnico did reverse that, and GDX obviously liking that. Newmont didn't really participate, as you know, there's forced selling and rebalancing that goes on. But the point is, sentiment was just terrible on Monday. It was very reminiscent of, you know, 2016, 2015, that kind of area. And again, when you get too many people loaded to the one side of the boat, you got to start looking for, you know, the contrarian play. And it's, you know, the same thing with the market here. We talked about there's just too many shorts in the market, too many sellers, and that's why we're looking for a summer rally. And that is what in fact has happened. But overall, you know, Newmont did have that bad earnings report. But overall, you know, a nice reversal here for gold, getting off the lows at that 1680 area. You know, we'll probably stall out around that 50 moving average, but a nice little reversal there for gold and gold miners as well as silver. Take a look at the move here on silver the last 3 days. Just a huge surge from basically 1850 to the closing price Friday of 2033. So I'd give that, you know, maybe a little bit more room to that 50 moving average in the short term, and then you can get above that. You know, it's about 21.25. I've got a good trend line right in that area. You know, the gold silver ratio is basically at, if you discount the pandemic, it's at a, you know, a 30-year high. So it hasn't been, you know, this high since 1990. That means silver is very cheap in relation to gold. So a lot of these miners are in a lot of trouble right now. And you'd think that would be not good for the price of silver, but the problem is now supply doesn't come online. So now you have less supply, which can help the price. So there's a lot of dynamics that are going on right here. A lot of things shifting around. But again, the point is we hit some good levels. I showed you guys this area at 18. So there's a very good chance of a continued bounce here on silver. Platinum here also getting a nice bid. Told you guys I like that 820, 840 level. I am still long platinum. Nice bounce here. We made a higher high. You know, in the short term, we probably have resistance at this trend line and that 50 moving average there. There's that trend line going back to late 2020, actually. But nice little area there. Bounce. We broke it. So that's going to be probably resistance on the downside, but I still love the level here on platinum. And palladium also did participate in the rally this week as well. Copper finally getting a surge here off the lows. Put in that low around 312, 313, and you know, finally getting above that 20 moving average. Just wickedly oversold here for a long time. I've got a level around 370, 368. So near term, that's probably where it will stall out. But again, still very oversold. Even with this nice snapback, it's still, you know, pretty extended from that 50 moving average. All right, so let's flip over here. Briefly talk about the cryptos. So Bitcoin as well. You know, this all kind of ties in, you know, with the equity markets here. But Bitcoin did get a nice little rally this week, also participating. We talked about this kind of, you know, nice little pullback pattern. So we got above the 20, we got above this pivot high, and then we started to pull back, put in a little doji right there, and a nice little rally. Ether has held up much better. I love this pattern. I pointed this out multiple times this week. Nice little bullish inside bar, little micro test candle the other day, and then a 3-bar push up into the end of the week with a little pause on Friday. This is still, I'll give this the upside bias. You know, it's basically got to my target. I said about 1,800 here in the near term. If this can continue to consolidate a little bit, this can possibly get up to 2,000. But again, it's had a nice move, and it's basically positively correlated with the market. So it's going to do what equities do, but same thing with Bitcoin here. So about 26.5 or so, that's kind of your upside move there. But the cryptos did have a nice week as well. All right, so lastly here, so I wanted to talk about this. I said I would address at the end. So essentially, market right now is looking forward to, you know, a Fed pivot of some sort, and that's why we got that nice rally. That's why bonds have rallied. But the next concern, and I can't stress this enough here, the next concern will be that the market's going to realize that the Fed can't pivot the way that they used to. So essentially, you know, previously for the last 13 years, they've been able to just print with impunity. We have, you know, sub 2% CPI. They can do whatever they want. And that is obviously no longer the case. This type of inflation is mainly supply side driven. It's, you know, the supply chain being broken, and the Fed can't print more food. They can't print more oil. They can't make OPEC increase their oil output. The OPEC's already tried, you know, they're saying they're at max capacity. the point is, best case scenario, we drop to maybe 4% CPI for a brief period if we have a massive recession, and then we probably bounce back up to closer to 7, and we stay in a range between 5 and 7 for a while. The Fed can't print us out of that. The best they can do is maybe stopgap, do kind of like Japanese style QE, where they're basically saving the market, saving the system, but they're not going to be able to just blast us off to all-time highs anymore. It's not going to be like that, and it's not looking like it's going to be like that for a while. But I just wanted to make that clear here, as we've been talking about a summer rally. We got the summer lows here. The market was oversold. We needed to shake out some of those late shorts, but we will come into a problem here in the future. And obviously the market likes what it's hearing right now, because it's, we've had no good news for such a long time. The market's relieved to hear that, okay, maybe the Fed will pivot in September. But at some point, the market's going to realize that inflation's not going to go back to 3.2 CPI like that's essentially they've been saying. It's not going to happen. And obviously we know CPI isn't even, it's a fabricated number at best. But even so, CPI is not getting anywhere near 3.2%. So the Fed's not going to be able to just move us out of this. And, that will be a problem down the line here. But for right now, the market is rallying. And, again, based on the cyclical work I've done personally, we still have a little bit more time here before, we have to get concerned about that. But in any case, I'm going to wrap it up here. Thanks for watching, guys. Come find Jason on Patreon. Come find me on carnivoretrades.com, and I'll talk to you all next week.